What's going on, guys? Welcome back to another episode. I know it's been a while. I have really shifted my focus over to X, trying to build up some of my relationships and networking over there, and it's going great. We are growing every day, but I had to shift my focus back over here to YouTube because I know you guys need some love too. So, we're going to talk about a lot today. We'll get into some of the news, the current events that'll really have an impact on Bitcoin's price and crypto as a whole. And then we're going to talk about some TA because that's what we do here. With that being said, let's get into it. All right, so over to the news, and the first thing we have to talk about is the war that's going on right now. And unfortunately, you do have to take that into consideration when you're starting to think about your investments because they do have an impact on price action. Historically, if you look back at Ukraine when all of that was kicking off, the prices really dumped. Ultimately, they did recover. But what that does is that gives me hesitation right now in making a trade because of the uncertainty in the world. Now, if you guys have watched this channel for any amount of time, you know that I try to stay out of politics as best that I can. But honestly, like, I just feel bad for the people that are going through this right now because if you see some of the videos, it is absolutely heartbreaking looking at some of the devastation, especially with children. I have a super weak spot there. I just hate seeing that. So, hopefully this ends soon. That's what we would all like to see ultimately is just peace, right? All right, so over to the FUD segment. And I got to be honest with you, this really isn't FUD. It's just the facts of life right now. Inflation is through the roof still. They've cut out a lot of the major things like utilities and food. And so it kind of manipulates what they're reporting in terms of inflation because let's be honest, like most of us are highly impacted by fuel, utilities, and food, right? That's kind of I'm not going to say that's our main expenditures, but it's a lot of what we spend every month. And for some people, like that's their focus when they're paycheck to paycheck. They put a roof over their head and they put food on the table. Looking at this and looking at housing, there's some different schools of thought there. But for me personally, if you're talking about the average individual and they're moving, say, to a new job or moving to a new state, or they're a first-time home buyer who's done with renting, everybody has their reasons for looking at a home right now. Their disposable income is going to essentially get wiped out by these crazy interest rates. Like all you have to do is go back, look at say 2019 when rates were somewhere around 2.25 to 2.5, anywhere in that area. That's about when I refinanced. Because of that, I am going to pay significantly less on my mortgage than what people would have to pay right now. So for the same type of home, in some cases, it's almost double what they're actually paying back to the bank right now. It's kind of insane to think about. So I do think long term, this is going to hold the market back quite a bit, but that's just kind of my thought on it. I do want to give a little bit of credit to Army Piper. He actually had this on his channel. If you're really interested in looking at some of the macroeconomic effects on the market, you can really pull some useful data from here. All right, over to the market update. You can see Bitcoin is down 0.14% at current time. Ethereum is down 0.91%. And that's no real big surprise with all the uncertainty and volatility in the world right now. But you can see ultimately it's not having a huge impact on Bitcoin, which might actually be a good sign when you're talking about the overall crypto market. So nothing too crazy here. It doesn't look like alts are really getting crushed or anything like they were about 24 hours ago. I saw a lot of them drop probably 4, 5, 6%. Let's go ahead and take a look at some of the top 10 cryptos. All right, over to your top 10 cryptos. Bitcoin, Ethereum, as always, number 1 and 2. Bitcoin over the last 7 days is actually up 0.5%. Ethereum is down 4.7. BNB down 2.7. XRP down 2.5. Solana is down 8.2%. Cardano down 5.1%. And Dogecoin down 4.4%. So there has been some changes here in the top 10 since the last time that I actually looked at it. But it does seem as though people are starting to trickle over to Bitcoin as a safe haven again. All right, ladies and gentlemen, over to my favorite part, and we're going to look at a little bit of TA. Now we're going to start here. We're going to zoom out a little bit. And the one thing I want you to look at is the 28,500 region, right? So We just rejected off there a few days ago, and it made a lot of sense. Once you zoom out a little bit and you look at the charts, you can see this area here, come here. All of it was actually support, but you got major movements when you actually move through that zone as well, right? So when we broke that area, big movement, we came up or we came back down, we retested it as support, and then we made a pretty large move to the upside. Now here we come again. We come down, we test it as support. We got a little bit of a bounce there. And then all of a sudden we got a pretty big movement to the downside once it actually broke that area. So I point that out because I see that as a major area of support and resistance, 28.5. So that's a number that I would really keep an eye on because I think that's going to tell us a lot with the current trend or movement that we're making right now. If we break that area, then I could really see some continuation to the upside. Now, let's look a little bit shorter term here. What's kind of happened? You can see that generally, since we made that low at about 15.4, we started an ascending broadening wedge. All right. So you can see there was multiple areas of resistance and support as it was going up and right. And you can see if you really look at it, it's kind of making this, you know, angled, almost like megaphone looking pattern. Okay. So that's an ascending broadening wedge. Now, one of the things that a couple of other guys that are doing TA right now are pointing out is the potential for a head and shoulders pattern. So, a head and shoulders pattern, if it does play out, it could actually be more of a bearish pattern. Now, you look at the way that we entered into it, and sometimes that has an impact as well. Did we come from, a higher price range or did we come from a lower price range? So looking at it here, you can see this is the left shoulder, this is the head, and then potentially we're forming a right shoulder. Now we've seen this a couple times in the past over the last, we'll say 6 months to a year. And I will say the majority of the time that we've seen a head and shoulder begin to form, it hasn't actually played out. So we didn't actually see the conclusion of the head and shoulder pattern. So understand that that's still definitely on the plate. One of the things that I don't like to see though is that if you look at the left shoulder, you look at the head, and then you look at the right shoulder, if this right shoulder is actually lower than the left shoulder, also, I would say not always a good sign. Just another thing kind of pointing in the wrong direction for me. All right, so what else can we look at here? You can look at the Fibonacci retracement level. So you can see it did go from its low up to the high, and now it's retraced back to the 382. So we're kind of in this horizontal zone right now. We're kind of ranging between the 382 and this resistance area. So this was kind of the zone I was keeping an eye on previously until I zoomed out and really looked at it. And now 28.5 really seems to be the significant level. And that's kind of confirmed by this rejection or this latest rejection that we've had in that area. All right, so we broke out of this ascending broadening wedge, and then we had this descending trend line here, ultimately acting as resistance. We broke out of that, and that's when we got a little bit of a move to the upside. Now, if you guys have been around for a while, one of the things that I like to do is look at these trend lines. I'm not a big breakout kind of guy, but if we do break out of a pattern or if we do break out of a trend, I do like to see that it pushes through that trend line and then retest it as support. That's kind of a confirmation that we'll get a little bit of a continuation to the upside. Now, again, I'm not real big on major moves. I don't hodl. I make pretty small trades, and that's just kind of my game. So that fits what I like to do. All right. So as we zoom in a little bit more, I want you to pay attention to this 100-day moving average. This is the EMA. So this green line here that you see has been very significant, I'd say, over the past few months, honestly. And you can see that it's acted as support, it's acted as resistance and support. You can see support here, resistance here, support here. And then you can see it came up, it hit. I mean, it was significant resistance there. And then it dropped back down. It came up, it was resistance. But now we've actually broken out. Okay. So we've broken out. We're on top of that 100 EMA, and you can see it's now support. But is it going to hold up? That's kind of the biggest question. So far, so good. Over the past 4 or 5 days, it's been providing support, and it's provided a very tight trading window, we'll say, over that 100 EMA. in around the 0.236, which is kind of acting as resistance. So if you come down and you look at the RSI, you can see over the past month or so, RSI really has been trending up and right. So that actually was one of my indicators for me to entering into a trade. And I will get into that in our next segment. And I'll kind of walk you guys through one of the trades that I made so that we can learn from it. I think that's one of the things that I do on this channel that will be a little bit different. There's a lot of people that are concerned with actually showing people their trades. Uh, Not here. I'm going to show you my trades, win or lose. So also you come down, you look down at the BBWP, you can see we're kind of right in the middle there. What you would like to see is really towards the top or the bottom of this chart. And that'll let you know that there's potential for some volatility, whether it's contracting or expanding. That the stochastic here is starting to bend over, but you can also see a series, right? You can kind of see a trend here. It's just going lower and lower. So it's losing a little bit of momentum. Those are momentum based indicators. All right. So keep that in mind. Now, looking at the money flow, generally, it is eking up ever so slightly, but not enough to really get me going. I could honestly see the potential here for us to kind of break down and come back for another retest of this line here, this trend line. That's why I'm kind of keeping it on the chart because I think we may come down, retest that before we actually set a higher low, which would kind of fall in line here. And then there could be some continuation to the upside. Now, why am I being a little conservative right now? Mainly because of the macroeconomics and what's going on in the world right now. So that gives me a little bit of a pause, and that's okay. You don't have to trade every day, right? Like, so you can take a back seat. Will you miss some trades? Yeah, you will. But at the same time, you got to understand rule number one for me is protect your money. All right, so let's take a look at a trade that I entered into. And I've talked about this a little bit, especially on my Twitter. So I'm trying to be a lot more engaging. I've kind of made a commitment to myself to put out at least one post a day. And so you will see when I enter into trades. All right, so one of the trades that I initially entered into, if you look back in my videos about 6 weeks ago, I went ahead and set an entry position, well in advance of the price ever getting to this level right here. Reason is there was the ascending broadening wedge. I saw there was there was an opportunity there for support. Then I was looking at the 200-day moving average, and that is usually a pretty significant area. At the time that I set it, there was potential that it could line up to right about here. It did drag out a little bit before it fell. When you enter into these positions, one of the things that you want to look at is where is the next potential support area. Fibonacci retracement levels are a really good indicator that you can use to kind of get ahead of those, right? So that kind of helped me with my stop loss. All right. So I knew that the next area was going to be the 382. Now, you don't want to set your stop loss right at the 382. You can be careful with that, right? You'll just get stopped out. Now, what you could have done, or what I could have done, is set a stop loss immediately under that 200-day moving average. So when it fell, just stopped out. But no big deal, right? I stayed in the trade and I lived to fight another day, just with the hopes that we would come down to the 382 and maybe would get a bounce or potential movement to the upside. So what I did is I lathered into the trade though. And this is really important, right? So I turned a losing trade into a winning trade and I closed it up about 16%. So what happened is it came down to the 382 and I waited and I looked and I saw that RSI was starting to trend up. And if you look here, this is kind of tied to the MACD on this indicator. This is the market cipher B. It's like the Van Mucho. Let me pull it up for you so that you can see it. VMC cipher B. So this is a free indicator. It kind of runs along the same lines as market cipher, which is also a great indicator, but that's a pay for indicator. So I like free. If you look at the indicator, what you will see is it started to trend up and right. Everything was really trending up and right. Stochastic was trending up and right. RSI was trending up and right. The MACD was trending up and right. Everything was pointing to up and right. Down here, we got our little hit on volatility, right? So on the BBWP, which really that aligns to the Bollinger Bands, right? So you can see that it came down and it was ready for expansion, which means we were ready for some movement or volatility. And like I said, RSI was trending up. I took an educated guess here that we were at the 382 and that it would remain stable and that we would get some movement to the upside. Actually, more than doubled down on my initial investment. I did 5x leverage, and then I was able to cover myself and ultimately win the trade because it did go up. All right, so my initial thought for an exit was the 200-day EMA. Okay, so what I ended up doing though is saying, you know what, there's some potential here for a little bit more upside. Typically, I would like to get out and I would just close the trade right there at the 200-day, but I stayed in it. I don't know. I was feeling a little bit bullish. And again, you could have seen that on Twitter if you check me out there at TradeFly8. And I just wrote up my stop loss. So I brought my stop loss up. I locked in a little bit of profit. And then I was like, let's see how this plays out. We got a little higher low here on a smaller time frame. It continued up. It retested the 100-day EMA, but then it actually broke through. So it broke through and it came up to about 28.5, got that rejection, and here we are current time. All right, so I could see it was getting a little bit stagnant in this area. We got some bad news coming out in the world. Guess what? For me, it's time to get out because I'm locking in that profit and I'm being conservative. I'm protecting my money. All in all, we go back and we look at it. I ended up exiting at 27.6 and locking in about 16% profit, which is a great trade considering when I initially got into it, it was a losing trade. It was a nice little win. And I just wanted to share that with you, kind of talk you through kind of what I was looking at on the charts. And then, also tell you that there's a time to get out, especially when things are in flux. Locking in your profit and knowing when to do that is really, really important. Ladies and gentlemen, that about wraps it up. Thank you so much for watching. I truly, truly appreciate it. I have been doing some classes on the weekend as well on Twitter or X Spaces, whatever they're calling it these days. But come over, give me a follow at TradeFly8. You will get some more up-to-date information and you will see sometimes when I'm opening and closing my trades. And I'll talk you through it a little bit as well. And on top of that, I try to take a look at the charts in the morning and just give you a quick little excerpt of what I'm thinking or what I'm seeing on the charts in the morning. So yeah, with that, again, I appreciate it. You guys have a great week.